Hey, good morning, traders. Today I wanted to go over some key data points that I have picked out from the charts. Of course, we know that today and tomorrow it's FOMC time. Tomorrow, Jay Powell does his famous or notorious, depending on how you look at it, press release. And of course, the whole market is now hinging upon every word that he will utter at that time because it has great impact upon future potential action that the Fed takes in either strengthening the dollar or allowing inflation to continue to run. And it's a very precarious balancing act that they are performing at this time. We are at a historical moment in history. Fiat currency globally is being debased at an all-time high rate. And the Fed is, of course, has been debasing this currency as well. But at the same time, they want it to remain the dominant fiat currency. Uh, so it's a very tricky act to undergo. And the market, of course, is pricing in the fact that the Fed will raise those interest rates, and thus it has been tanking a bit lately. Very volatile price action. But today we're here to talk about some of the data points that I have discovered in reviewing the charts. Well, since we're here on the dollar, we might as well cover this one. The dollar is growing stronger. We came down below this ascending trend line, up back above it, and now have broken to the upside and above the 50-day, currently above the 50-day moving average. All right. So we're on the top side of this triangle, meaning the market is anticipating some hawkish um, stance by the FOMC. All right, and so with the dollar growing stronger, we're going to continue to see indexes topple. Oh, where did this wick come from? That's interesting. Just an anomaly, I'm assuming. Yes, it is. But coincidentally, take a look at this. It drops all the way down to a valuable level, doesn't actually fill a gap. Just something to observe. What I did want to point out is on the hourly chart, we did yesterday fill a gap. All right. And this is the same for all the indexes. Uh, and the gap occurs right here between 438 and down here, wick high 433. So that gap has been filled, meaning we don't have to worry about coming back up at a later time and filling it. The market doesn't. It can be, the same thing can be seen on the 4-hour chart, by the way. And you can take this as bearish, or maybe it doesn't matter to you. I just wanted to point out gap fills usually occur. And in this case, we've already filled that gap. So no need to worry about it into the future. We don't have to come back up and hit that gap any longer. That gap has been filled, meaning the markets can continue their pattern down if they so desire. All right. The other thing I see here is the SPY came back up and almost touched the 200-day, but didn't quite touch the 200-day. What does that mean? I don't know. Today, I'm just pointing out what I see on the charts. We like to come back up and kiss significant areas of resistance or support. This didn't seem to be as significant as I anticipated it to be. We came straight through that 200-day, didn't even stop, didn't even pause, didn't bounce up off of it, nothing, just came straight through. So maybe we don't actually have to kiss it goodbye like we do on significant areas of support or resistance. But this channel has always played an important role in our price action since March of 2020. So again, I do expect us at some point to make the turn and come back up and kiss the underside of that channel before we either continue sideways action or more downward trajectory. All right, Nasdaq and the Dow also have those gap fills, by the way. If I were to zoom in on the 4-hour, you can see it right here. And likewise, the Dow. Once again, we filled the gap, and the gap at this point was this gap between our neckline and where we dropped in price, came back up over that, did not confirm that on the 4-hour, and now we're back below. Let's take a look on the daily what this looks like. All right. So there we have it. We're under this neckline, and we can continue to trend downwards if the market so desires, if that's what they're feeling. All right. What else do I have here? Okay, volume capitulation on the Nasdaq. This is pretty high volume. Like, we have not really seen this level of volume since, I believe it was March of 2020. Let me take it out of auto here, put my crosshairs on, move it up so I can see what's going on. Actually, that is record volume. All right, that is record buy volume and pretty close to record sell volume. Yes. So this sell volume matches the volume we saw in December of 18. Here's our March. So here's where we're at. And we didn't even get this amount of selling volume in March of 2020, guys. So that's an indicator. That's an indicator that we have to pay attention to. Let me mark the level there. Circle that so you can see what I'm talking about. That is our volume. And over here is the March. We did not even reach that level of selling volume on the QQQ. All right, I mentioned already that DXY is stronger, the dollar. VIX, let's take a look at that. All right, so back out again. We have one, even though this is a red candle, it is a spike in fear. 2, 3, 4, 5, 6, 7 days. And I imagine we have one more day where we could spike up in this area. Typically, you don't get 7, 8 days of heightened fear in a row. So keep that in mind as well. We could have our peak of fear today or tomorrow. All right, so then Jay Powell speaks tomorrow afternoon. And so, again, like I said, one more day we could have a spike in fear. And now let's jump over to our crypto leaders. Take a look at Bitcoin. And I know this is very busy. Apologize for that. Lots of data here. Oh, I hate jumping back and forth between these, the cross and the pen. All right, so this is interesting because yesterday when I made a video, we were down here, right? And I said, we don't have confirmation that we're going to move further down. I said, what I'd like to see us is to close above here and confirm. So today's candle is still not a confirmation. We need to remain closed above this black trend line. That looks to be very accurate, guys, because you know, the price keeps jumping below it but not confirming, jump back above it, and we actually did close this candle above the trend line, opened a new one, closed above it. But on crypto, I like to see 3 days for absolute confirmation. So our candle today, we still need to see this guy close above that black trend line. And then that indicates the market may want to buy into this this selling capitulation. See that candle and represents the volume, and you can see the RSI down there is well into oversold territory as well. So it could be a bit of selling capitulation, although if I zoom out on this chart, we have it, it hasn't been as great as we've seen. Like for instance, in May, look at that. Look at where we are in terms of selling volume, way up there. So there is some room. And so that's what makes it a very, it's a hard chart to detect future trends on. And like I said, I haven't experienced these types of head and shoulders pattern with a small right form shoulder. And so this is kind of a new experience for me, and I'm keeping this one in the books. I'm going to measure the price action. And my questions were, is this thing going to play out to our full target down of 24,000? That's where a true head and shoulders would take us. Or because this is a malformed right shoulder, not fully formed, it looks like it's underdeveloped. Does that mean we only maybe go halfway down? And if we only went halfway down, 36,000 is the mark. That's significant trend line. That's very significant, guys. So we have to pay attention to this. And we're going to learn this together, I guess, since I'm not really getting an answer from anybody. Somebody said this was a 3 peak and dome pattern. I don't see that. I don't see that if I zoom out here, and that's for another video. So I won't discuss that any further. What else we got going on here? All right, so let's say we do close above this trend line. Huge resistance ahead of us. We got 36,000 right above us. And then this new trend line I just drew today, this purple trend line down. Sorry, I've got a bit of a cough. I don't know why, but it's lasted for a few weeks here. That is also significant trend line down. 39,000 might be a mark. But the other statistic I'm keeping in mind is over 40% of our short-term holders are underwater. Net unrealized profits. This is a historically large number, guys. So what's going to happen is even if we do get the bulls buying back up this selling action, there's going to be a lot of short-term holders above us that are looking to sell, and they're just going to want to take their profits and break even, and that's going to provide a great amount of resistance ahead of us. All right, so we need to keep that in mind as well. What I do like about what I'm seeing is this does appear to be sort of a V-shaped, and I like the V-shaped recoveries, right? So when we spike down, we have this large wick, and you can see that on all the indexes as well, a large spike and then jump back up. And that may not be yet what we have discovered, but we've been having a lot of V-shaped, and you can even see back here, V-shaped recoveries. And so this might be the start of one, and it might not be. I don't know. Let's jump over to the dominance chart. And we're coming up into resistance. Additionally, the 200-day is coming down into our, what is that, 42.62 overhead resistance right here. So that's good for altcoins. That's a good sign for altcoins, but there may still be a few more days of selling ahead of us. Again, we have to keep all of this in mind. And what you're looking to do here, guys, is just all of these data points. What I like to do is I like to have a chart, and I have my pros over here, my cons over here. I weigh that aggregated data out. I see who has more substance, and then I go with that. And right now we're in between, but I'll be honest with you, I'm seeing more positive signs that will move up than negative signs. It's just with these with this latest selling and the fact that we have, you know, over 40% of historic, this is a historically large number, 40% of short-term holders with unrealized gains. That is a lot of resistance ahead of us. So the bulls will have a lot of work to do. All right, we can do a few more things here. I guess we have some time. VMC Cipher B. Again, you don't want to rely on any one chart. You just want to correlate all of this data, aggregate it, and then come up with a common denominator of sorts. And so here we're seeing on the Cipher B divergence, you're seeing double dots down here. That is almost always a good sign that the market has, in fact, capitulated and will head up. Now, you could have double dots, and then, you know, we have more selling and back and forth for a little while. And that definitely could be what happens. I do want to show you something that I have just observed, and I don't know, take this for what it's worth. All right. So if I come over here and take a measurement from when we had our death cross to when the bottom was on this previous death cross, the bottom was 31 bars out, 31 days out. All right. And you can see that from the death cross, the price action really did not go down. So it was essentially, let me mark this out here. So you can see that the price action essentially stayed around the same price for 31 days. We did finally capitulate over here, and then we moved up rather rapidly. All right. Why I'm pointing this out is the market does like to repeat these type of patterns. So if I was going to do the same thing here and measure us out from our death cross to 31 days, that comes right to Valentine's Day. All right. And we can say that let's say the price action would do essentially the same thing. So I'll mark out a level here, and we might capitulate down to that 31,000 again, around or on February 13th and 14th, if the pattern does exactly the same thing. It's just something interesting. I'm not saying that's going to happen, but if I was a betting man, I would say that's more likely than not. I got to see where I'm at here on time. 18 minutes. Okay, so that's just something to take into account. All right, I've got 2 minutes here left. So some of the negatives we still have to consider is the indexes don't have appeared to take a turn to the upside yet. VIX still has more fear capitulation, and we still have that FOMC press release tomorrow. We have to take all of that into mind, as well as the selling volume on BTC could have been greater at a capitulation area. So that's all signs that we might still have more either bearish price action or sideways price action. But again, the big thing that I look at, and you guys know I love my trend lines, is this $36,000 mark. And we are above that. We closed above that once, opened to close above it again. We're waiting for today's candle. Let me zoom in here again. We're waiting for this candle right here today to close above that. The line in the sand is approximately 35,837. That's a good number. All right, so we close above 35,837, and I think we're going to have a little buying action over the next couple days. All right, hope that helps, guys. Let me know if I've missed anything or you see anything else. You want to add that to the comments. I and my subscribers would appreciate it, and we'll catch you on the next vid.